You can now get a 10-year auto loan.
Excuse me?
A 10
Stop it.
year auto loan, Dad.
10?
There is a credit crisis in the United States of America. No one, let's just
No, you need to rephrase it. There's an intelligence crisis going on in America. If banks are now offering 10-year auto loans, that's not a credit crisis.
All right,
that's a stupidity crisis.
We're going to break this down. Miss Kimberly Klein, the F&I goddess herself on our team, found 5 credit unions that currently offer for their members 10-year auto loans. 10-year.
Yeah.
That's insane. 120 months.
Yeah.
And some of them are pretty good rates. Like I would take 10 years at 5.5%. That's not so bad. But Dad, let's start here. When you started in the business back in the 70s, what was the typical auto loan term?
24 months.
Okay, great. What makes sense about a 24-month loan on a car?
Cars were under warranty for 3 years or 36,000 miles.
Number one.
They were under warranty the whole time you had the loan.
Yep.
So that was the first thing. And obviously cars were much more affordable back then.
And also you're paying less interest.
Over a 2-year
period.
As opposed to a 10-year period. Yes.
Yeah, we've moved in a direction where you're going to own and if these are 10-year for used car loans, own a used car that likely is already out of its bumper-to-bumper warranty or close to its bumper-to-bumper warranty. You're going to own a car out of warranty for 10 years. Mm-hmm. You're going to be paying 10 years worth of interest payments.
Yes.
Like, just let that sink in for a second. Simply so that you can have a monthly payment that fits in your budget.
Yes.
This is not advisable, correct?
No. No, you want to, the idea is to pay back as little interest as possible, not go to the bank and go, hey, can you work it out for me so I can pay way too much interest? Yes, I was going to say, could we go to a loan calculator and plug in, I think the minimum amount at one bank was $30,000. Okay.
Yep.
And it was 10 years and I don't know, was it 5.49%?
Let's just do 6%.
Okay. Thinking about getting an extended warranty? Go to joinyaa.com and check out our pricing there. There's no obligation, no spam, no robocalls. YAA for your extended warranty. Now, how much interest are you paying back?
You are paying nearly $10,000 in interest.
Yeah, but your monthly payment is cheap enough. It's only $333.
Now let's do that same loan, Dad.
Yeah.
But let's do it for
5 years?
Okay. You're paying back $4,799 in interest.
Yes, but then your payment becomes an unaffordable $580 a month.
This is why we have a credit crisis in the United States of America. So many people are just burdening themselves with this obligation. The value of that vehicle, if you were to plot out the depreciation of a vehicle over 10 years versus the amount of principal you're still paying down on that loan, you are going to be, what's the word? Underwater?
That's the phrase that's used often in the business. And may I suggest to you that in the old days with 60-month loans, typically you had to be in the loan about 50 to 52 months before you were at a break-even point on your vehicle where the value of your vehicle was equal to or greater than what was still owed. That normally took about 50 to 52 months. 72-month note, would take you into 60 months, 60, 62, 63, 64 months. Once you start getting into 7, 8, 9, and 10-year loans, I mean, my God, the break-even point on a 10-year loan is probably going to be, I don't know, I'm guessing 8.5 years. Well, let's assume you don't grow tired of that vehicle in 8.5 years. Or let's assume that the maintenance costs of that vehicle, I don't know, haven't eaten up all of your money.
Plug for CarEdge.com has all this data broken down by make of vehicle and model of vehicle. Like, look at that before you sign up for a 10-year loan.
Yes, know what to expect, how much it's going to cost you, what the expected costs are on an annualized basis, and at what time to expect a major breakdown, a major expense for that vehicle. And if you're on a 10-year note and looking at this information that 6.5 or 7 years into that 10-year note, you're going to have a major expense for repairs, you better start putting that money away today, folks.
Yeah. Okay. So here's the deal.
Yeah.
If you need to get a 10-year loan to afford a vehicle,
You shouldn't be getting a vehicle.
boom. If you're going to buy a car, don't finance it for 10 years. It is not a winning proposition. Absolutely not a winning proposition. And it's one that's just going to burden you down the line when you try to get into a different vehicle, because you're probably not going to want the same one for 10 years if you're like most consumers. There are a subset of people who just hold on to stuff, and then this could make sense for you if you don't have the money and you know you want to hold on to it. But like, generally speaking, 10-year financing on a car is a major no-go. And I think it is an indicator of a looming credit crisis. We're in one right now. There's another one around the corner, because if folks are doing this, they're going to be underwater. They're going to get disinterested in paying for it because they're disinterested in the car.
They're going to have issues.
The major repair props
They're
up.
going to want to get out of it, and they won't be able to.
Let me roll the negative equity from my 10-year loan into a new 10-year loan. This is.
Or by that time, we might offer 15-year mortgages for cars. Who knows? It's kind of crazy.